on spotting, understanding. I'm going to be teaching you 4 things. I'm going to be teaching you 4 today. First of all, I'm going to be teaching you how to spot and understand trends. Understanding the market is on an uptrend, if the market is on a downtrend, or if the market is ranging. And I'm also going to teach you how to spot valid break of structure. I'll also teach you how to spot a valid inducement, and then I'll also teach how to spot impulsive and corrective move that the market creates. First of all, we are going to start by understanding that a trend, there are 3 types of trends. Of course, I told you guys the last time that we have 3 types of trends. We have the uptrend, we have the downtrend, and then we have the sideways or ranging markets. And then now I want to show you how to spot a downtrend, an uptrend, a downtrend, and a sideways. That's spotting / understanding trends. Now for this, we are going to make use of different time frames. Time frame that I have here, I have the monthly time frame, I have the weekly time frame, I have the daily time frame, I have the 4-hour time frame, I have the 1-hour time frame, I have the 30 minutes time frame, I have the 15 minutes time frame, and I have the 5 minutes time frame. These are the time frames I use when it comes to trading. And the pair I have here is GBP USD, British pounds / US dollar. GBP USD, that is the pair I have here with me. GBP USD, British pounds, US dollar. I want to spot a trend. Now we are on the monthly time frame. The first question we'll ask ourselves is, what is market doing? Is market on an uptrend? Is market on a downtrend? Is market going sideways or ranging? Market going sideways or ranging? So now, as you can see, for market to be on an uptrend, it has to create series of higher highs and higher lows. And for market to be on a downtrend, it has to create series of lower highs and lower lows. And you can also understand the fact that market is on a downtrend and uptrend is if you're seeing this type of structure, the market is pushing up. Once you see it, you know that okay, yeah, market is on an uptrend. Because why? Market is going up. This is an uptrend market. You move up, market is going up. And if you see something like this, if you keep seeing something like this, shows that market is on a downtrend. Market is on a down move. You understand what a down move is. Market is actually on a down move. Market is actually on a down move. So that's what this is called, a downtrend, creating series of lower highs and lower lows and lower highs and lower lows and lower highs and lower lows, just like I taught you the previous episode. So now on the monthly time frame, I am on the monthly time frame here. Now on the monthly time frame, this is it, monthly. Now if you don't know how to add your time frames, you can just come here and add your time frames. You can start anyone, you can start any of your time frames here, or you can create a custom time frame of your choice. I don't know, maybe you want to be going down to 12 minutes, you can create it. You want to be going down to maybe 14 minutes, 17 minutes, you can also create it. So now, as we can see, what is price doing? Like I told you, price is doing this. It's creating lows and highs and lows and lower highs and lower lows and lower highs and lower lows. See? So price is on a downtrend. You understand that price is on a downtrend. This is what price is doing. Price is on a downtrend. On the monthly time frame, you know that market is what? Market is selling on the monthly time frame. We know that price is on a downtrend on the monthly time frame. And the next question we are going to ask ourselves is, since we know that the monthly time frame is on a downtrend, this is a downtrend, price is on a downtrend on the monthly time frame. And since we know that the monthly time frame is on a downtrend, what else are we going to be looking at in the market? We know that price is on a downtrend. Now we want to find the last swing point. Since we understood that, okay, price is on a downtrend, right? Yes. And the next question is, what else are we looking for here? We're going to be looking for the previous swing point. I made mention of this in the last class. The previous swing point. We're going to be looking for the previous swing point. And like I told you guys the last time, that a swing point is actually where price tends to either buy or sell from, where we expect price to come and buy or sell from. That is actually a swing point, where we expect price to buy or sell from. That is our swing point. So now, on the monthly time frame, what we want to look at is we want to look at the current swing point on the monthly time frame. We are looking for the current swing point on the monthly time frame. Before we look for, now knowing that market is on a downtrend here, remember that I told you that for us to map out downtrend, the structure of a downtrend, we have to take note of our lower high. We have to also take note of our lower low. We have to take note of our swing point. And we have to take note of our swing point, and we also have to take note of our inducement. Also properly map out the market structure. That is what we have to take note of. So yeah, that's actually what we have to take note of. Sorry, I had to look at something. Then for an uptrend now, if price is on an uptrend, remember I told you that we are going to be taking note of some certain things as well. Higher high, we're going to be taking note of the higher low. We're going to also be taking note of the swing points. Then the last thing we are going to be taking note of is also inducement. That's liquidity. I remember telling you guys that inducement is also called liquidity. Inducement, liquidity. You can call it an inducement, or you can call it a liquidity as well. It's the same thing. So now, on the monthly time frame, we know that price is bearish. Look at the downward move. Now our problem is, where is the current break of structure? Now, okay, yes, I have to put this here. I am going to look for, and then the third one is going to be a break of structure, BOS. The fourth one is going to be swing point, and the fifth one is going to be inducement. Just like here, the third one is going to be a break of structure. The fourth one is going to be swing point, and the fifth one is going to be inducement. So now, what am I expecting? I want to look for a valid break of structure. Well, we are on the first one, spotting trends. Now, for a downtrend now, I want to look for the last lower high and the last lower low. I want to look for the last lower high and the last lower low. The last lower high and the last lower low. And remember, I told you that lower high is the highest point. Lower high is the highest point within a move. The highest point within a move. If we look at this market, we can say that this is our break of structure. But first of all, we're going to call this a lower high, because after this price here, after this position here, The highest place we can see again is this point. This point is the highest place we can see again in the forex market. This point is the highest point we can see again. So this point, this is the lowest part, this is the highest part, and the lowest part was broken. Then this point, this is the lowest part, this is the highest part, and the lower, and here was broken, right? Yes. This is the highest part, this is the lowest part. So we expect price to break this. We expect price to break this low by body, and it did not break, it just wicked it. It wicked it. So what I can do at this point is I can zoom in. So like I was saying, we have a high here, and we have another high here, and we have another high here. We have another high here. This is not a high. We have another high here, which was broken by wick, and we have another high here. So now we're looking for the last high on the monthly time frame. Last high that was broken. The last high in which the low was broken. There was a break of structure before that. There was a break of structure after the high was created. There was a break of structure after the high was created. And if you look at this, you understand that this being the last high, right? Yes, this being the last high. Is there a break? Yes, there is a break here. So since there is a break here, we then do what? We then call this the lower high, because this is a monthly time frame. Call this the lower high. Based on a downtrend, like I told you guys that on a downtrend, once market is trending downwards, and what we're actually looking for is series of lower highs and lower lows. So this is our lower high, our current lower high. And I told you, I remember telling you that once price breaks structure to the downside, once market breaks structure to the downside, it becomes a valid break of structure, right? Becomes a valid break of structure. So if this is our lower high, we can call this our inducement. We can call this level here our inducement. We call this level our inducement. And then we can call here our lower low. We call here our lower low. We call here our lower low. Then since price broke, we call it a break of structure. But now, here's what I want you to take note of. I want you to take note of the type of break of structure that it is. The type of break of structure that we have here. Now, a break of structure for a downtrend, I want you to take note of this. The break of structure for a downtrend is when the previous low, the lower low was broken. The lower low was broken or taken out. You see, this candle took out this lower low. This candle took out this candle. I'm going to zoom in properly for you to see it. This candle took out this candle, took out the low of this candle. Now, our value, like I told you, what we are looking for is after we find our swing point, we're looking for a valid break of structure. Now, this is a valid break of structure. Why? Because this low was broken, and it was broken by what? By body. When it comes to candle analysis, this is the wick of a candle. This is the body of a candle. This is the wick of a candle. This is the body of a candle. Once price breaks this low, once price takes out this low and it takes it out by body, then we can validate this break of structure. Once price takes out this low and it takes it out by body, then we can actually validate a break of structure. That's what I'm trying to let you understand. Once price takes out this low and it breaks it by body, takes it out by body, not by wick, then we call it a valid break of structure. Now, since we know that okay, on the monthly time frame, we have our lower high, right? The last high that the low was broken. The last high that the low was broken. We have our lower high, we have our break of structure, and then what next? Like I told you that we are looking for, today we are going to be confirming. Since we've confirmed that the monthly time frame is on a downtrend, the next thing we want to look for on the monthly time frame is our lower high and our lower low. And then we've confirmed our lower high and we've confirmed our lower low. Now the next thing we want to look for is our valid break of structure. And I just showed you how the valid break of structure looks like. This is a valid break of structure. A valid break of structure, like I told you, is when the low of a downtrend, when the previous low gets taken out or gets broken by body, when the previous low gets taken out or gets broken by body, that is when we validate that is a valid break of structure. Now, this break of structure, what it's trying to tell us is that the monthly time frame is going to continue on an uptrend. And the monthly time frame is going to continue being on a what? On an uptrend. That is what price is trying to tell us. The monthly time frame is going to continue being on a what? On an uptrend. That is what price is actually trying to do what? To tell us. The monthly time frame is going to continue on an uptrend. On a downtrend, sorry. On a downtrend. That the monthly time frame is on a downtrend and it will continue with that downtrend. I'm saying that what I'm going to be teaching today is how to correctly know the trend of the market, then how to look for your previous swing points, how to know a valid break of structure, an impulsive and corrective move, and then an inducement. So in the first video, I've already talked about it. I've already talked about the first video. I've recorded it and I'm going to be sending it. So now it's going to be like a recap. I'm going to be doing a recap. Like I said, uptrend, downtrend, sideways market. If market is doing a series of lower highs and lower lows, market is on a downtrend. If market is doing a series of higher highs and higher lows, market is on an uptrend. And I'm on the monthly time frame, and if you look at the monthly time frame, you can see that price is actually on a downtrend from the monthly time frame. Price is on a downtrend. It means on the monthly time frame, price is selling. So now, since we know that okay, on the monthly time frame, price is actually on a downtrend for GBP USD, the first thing we are going to want to take note of is the last lower high and the last lower low. The last lower high and the last lower low. That's actually going to help us to know how to move down to other time frames. Now, and I said that lower high is the last high before the break of structure. For downtrend, lower high is the last high before the break of structure. Lower high is the last high before the break of structure. Now, this is a high. Here is a high. Yes. Was this low broken? Yes, it was broken to this side. Here is a high. This place is also a high. Now, was the low broken? Okay, it broke this one. Then it came here. Okay, this is not a valid high. Here's a valid high. After the break, is a high. Was the low broken? Was this low broken? Yes, but it was broken by wick. So it is not. This place is not a valid high. I'm still going to explain why it's not a valid high. For us, I'm still going to explain. But then this is a high. This is a high. This is a lower high. And then for the monthly time frame, this is a lower high. And then this is a lower low, the last low. And price broke this last low. So breaking this last low now means that price has confirmed that on the monthly time frame, we are still bearish. We are not yet bullish. We are not yet on an uptrend. We are still on a downtrend. And I said a higher high and a higher low when we say higher high and the higher low, we know that price is on a downtrend. Now, to spot a value, now we know that the monthly time frame is on a downtrend. That is one. We know the data is trying to tell us now is that I'm on a downtrend. We know that the monthly time frame is on a downtrend. And the next data we want to take from this market is, like I say, where is the lower high and the lower low, based on the fact that the monthly time frame is on a downtrend. And we spotted the lower high and we spotted the lower low. The last high and the last low to be broken. Now, since we spotted the last high and the last low to be broken, the next thing we are going to be looking for is a break of structure. The price break structure is the break of structure valid break of structure. Like I told you, first of all, we spotted out the trend. You know that the monthly time frame is on a downtrend. And the next thing we are looking for is our what? Our valid break of structure. Our valid break of structure. Now, you can see from here that this lower high was broken. And as the lower high was broken, how do we confirm that this break of structure is a valid break of structure? We confirm that this break of structure is a valid break of structure only when that lower low was taken out by a body. It has to be broken by a body, not by a wick. Now, this is a candle, like I said. This is the body of the candle. This is the wick of the candle. This is the body of the candle. This is the wick of the candle. Now, this candle took out this lower low. This candle took out this lower low. And since this candle has taken out this lower low, what are we to confirm? We have to confirm that this is a valid break of structure. Why? Because you took it out by body. It broke by body. This line, it broke by body. It closed. Let us say it closed by body. It did not close by wick. It closed by body. So we confirm this a valid break of structure for the monthly time frame. We confirm this a valid break of structure for the monthly time frame. So now that we know that on the monthly time frame, we found our lower high, we found our lower low, and we found our valid break of structure. The next thing we are going to do is we are going to move down to the weekly time frame. Why? Because this move you're seeing here, all these moves you're seeing here, the price is doing. All this move, it is not on the monthly time frame. It is not a monthly time frame move. This move you're seeing here is the weekly time frame move, and then the daily time frame is also inside here, and the 4-hour time frame is also inside here, and the 1-hour time frame is also inside here. This is the move. This is what I'm talking about. Now, this, you can also call this video a top-down analysis video, but we are still going to do like a valid top-down analysis video on GBP/USD. But this is also like a top-down analysis video. You can call it like that because I'm trying to go from the higher time frame to lower time frame to show you the valid break of structures and the valid inducements, the valid lower highs and lower lows of the market before this session actually ends. So we can call this a what? A valid break of structure. Now, the next thing we are going to be looking at is if this is a valid break of structure. Going down to the weekly time frame, we want to see what that move is doing. Now, this is the weekly time frame. On the weekly time frame, you can see that small move on the monthly time frame is actually a big move. On the weekly time frame, it's actually a very big move on the what? On the weekly time frame. Actually, a very big move on the weekly time frame. Now, next thing we want to spot here is where is our swing point. Like I told you, now we spotted the market on the monthly time frame is on a downtrend, and then the previous swing point. Now we want to look for the previous swing point for the monthly time frame. The previous swing point for the monthly time frame. Look at that, our monthly time frame. And I told you that for us to know a swing point when it comes to an uptrend, that a swing point, sorry, for a downtrend, that a swing point is where? That a swing point is from the last, if we call this our lower high, we call this our lower high, we call this our lower high, and we call this our lower low. that our swing point is where we are expecting price to come to for us to be selling or buying the forex market. For a downtrend, it's for us to sell. For an uptrend, it's for us to buy. And we look at, and I told you that our swing point is from the last lower high to the recent lower low. From the last lower high to the recent lower low. This is how it looks like. Then for an uptrend, is, if we call here our higher high, and call here our higher low, and then this is a break of structure, this is a valid break of structure, we call this a valid break of structure, then it means that here becomes our higher low, and then since here's our higher low, then our swing point is going to be from the last higher high, the recent higher high, and the previous higher low. This is how it looks like. So this is our swing point. So what do we mean by swing point? Swing point is the region where we are expecting price to come. Based on we've seen this, we know that price is on an uptrend. Now we're expecting price to come down to a region directly within the higher low for us to do what? To buy price to the next break of structure. And for a downtrend, we're expecting price to pull back to this region slightly above the lower high for us to sell price back to a valid break of structure. And now you can actually draw this on your spare time. You're going to have the video. So now what I'm expecting price to do is, now I want to look for my swing point, my monthly swing point, and this is the previous lower high. Yes, and this was what? This is the last low. I'm expecting price to break. This is the last low I'm expecting price to break. So I'm going to be calling this my monthly swing. This is my monthly swing point. And as you see, price has gone up. It has pulled back to a region, to a zone closest to this lower high. So very soon the monthly time frame will be selling back down, or it can decide to go and change trend to the upside, whichever one it wants to do. So this, you can call this our monthly swing point. Yes, our monthly swing point. Call this our monthly swing point. This is our monthly swing point. Then moving down to the weekly. This move here is the weekly time frame, the daily time frame, the 4-hour time frame, and the 1-hour time frame that is busy creating these moves. So moving down to the weekly time frame now, we want to spot the valid break of structure. You see, the weekly time frame is inside the monthly time frame. This moves is inside the monthly time frame. Now we want to spot the next higher high for the weekly time frame. And remember that I told you that once we spot our lower high, lower low break of structure swing point, the next thing we are going to be looking for is inducement. Like I told you, inducement. Now, on the monthly time frame, we have our swing point, we have our break of structure, we have our lower high, our lower low. Now, our inducement. And I told you that inducement is a valid retracement move. I told you that inducement is a valid retracement move. All these moves you're seeing market will be doing like this. Inside there, internally. Creating all these internal moves is an inducement. Inducement is called a liquidity. Remember that I told you that if price is breaking, it's creating series of higher highs and higher lows, that there are retracement moves. Price will retrace like this before breaking this place. Now, all these retracement moves, I told you that inducement is the first and valid retracement. Please, you can write it down. I told you that inducement is the first and valid retracement. before and after a break of structure. This is a break of structure. Before and after a break of structure. Now this is a retracement move here. Now if this is our higher high, this is our higher low. Since this is our higher low and this is our higher high and this is our higher high, now the first retracement move, the first and valid retracement move after and before a break of structure. There are two types of inducement. I told you guys in the last class that there's inducement after a break of structure and there's inducement before a break of structure. And this is a retracement move. And this is a retracement move before, sorry, this is our lower low here. And this is a retracement move before a break of structure. This is a retracement move before a break of structure. And now, for us to confirm that this retracement move before a break of structure is our valid inducement, price has to take out the upper side. The upside has to be broken. The up and downside of the highest candle has to be broken. Take note of this thing. The up and downside of the highest candle has to be broken. For an uptrend, the up and downside of the highest candle has to be broken. Now, if we are entering the chart, we have our break of structure. And then I told you that after a break of structure, what we then look for is inducement. Price is going to take out the value. After a break of structure, price will seek to do what? Price will seek to take out the valid inducement before continuing the trend to the upside, before continuing the trend to the upside for an uptrend. And the reverse is the case for a down. The reverse is the case. Price will seek to continue the move to the upside after taking out the inducement. But I also told you that price can also come and create another type of inducement, that is inducement after a break of structure. Now price can come here, not take out this inducement, and create a retracement move, then break that retracement move. A lot of people will see this thing and call this a break of structure. No, this is not a break of structure. This is price transferring this inducement from this zone to this zone. Why? Because this high was broken. This high was broken to the upside. The highest candle, both the high and the low of the highest candle was broken. Before we confirm a higher high, remember that I told you that price has to take out the first and valid inducement. Inducement is called liquidity. Price has to take out the first and valid inducement. And inducement is a retracement move, a valid retracement move. And how is the move valid? The high of the highest candle has to be broken and the low has to be broken as well. The low has to be broken as well. And if price takes out this inducement, then this highest part now becomes our new higher high. Remember that I told you this highest part now becomes our new higher high. Now moving on to the chart, this is a break of structure, right? Yes, this is a break of structure. Now, the fact that we are moving from the monthly to the weekly time frame, we are going to be expecting price to take out an inducement. This is a break of structure. So price will take out an inducement before or after a break of structure. And for a downtrend, this is a break of structure, this is a retracement move. This is before. This is before. Right? Yeah, this is before. This is a valid break of structure. This is a retracement move. We expect price to take out this retracement move before breaking structure. This becomes our lower high. This becomes our lower high. This becomes our lower low. And we can only confirm this lower low after price has taken out the inducement. And I told you that inducement is the first retracement after a break of structure. This is a valid break of structure. And since this is a valid break of structure, we expect price to take out the inducement. We expect price to take out the inducement. Now, where is a retracement move? This is a retracement move. This move is a retracement move. This move is also a retracement move. But now for a downtrend, to confirm a retracement move, the lowest candle within that retracement move has to be broken. The lowest part within that retracement move has to be broken. Now, this is a retracement move. For downtrends, this is a retracement move. This is a retracement move. This move here, it's a retracement move. This move here is a retracement move. This move here, it's a retracement move. The price has to take out the inducement. And then I told you inducement is a valid retracement move. Now this is a retracement leg. Yes, this is a retracement move. Now I told you that the high and low has to be taken out. Now this is the high. This is the low. The low was not taken out. The low has to be taken out. For downtrends, the low has to be taken out. For uptrends, the high has to be taken out. This is the low. Was it taken out? No, it was not taken out. The price came and gave us another retracement. Now this second retracement now, what did price do? Price took out the low first of all. Price took out the low. So since price takes out the low, automatically we confirm this retracement as our inducement. We confirm it as our inducement. We confirm it as our inducement. This becomes our valid inducement. Why is this thing not writing? This becomes our valid inducement network. This becomes our valid inducement. Now we expect price to take out this inducement. So price will come here and take this out. Once price takes out this inducement, we then confirm this low. Initially, this low will not be confirmed. So price takes out this inducement. Once price takes out this inducement, we then confirm this low as our lower low. Confirm it as our lower low. We then confirm this low as our lower low. Then confirm this low as our lower low. Now, moving back to the chart. This is a valid break of structure for a downtrend. Yes. Now, we expect price to take out an inducement. But because of the fact that we are moving from monthly to weekly time frame, this inducement, this is a retracement move. Let me now show you. Now, this is a retracement move. After a what? Before this is a retracement move, before the break of structure, the monthly break of structure. This is a retracement move before the monthly break of structure. Now, being that this is a retracement move before the monthly break of structure, this move here, this is a retracement move before the monthly break of structure. Being that this is a retracement move before the monthly break of structure, what are we expecting? We're expecting price to take out this retracement move. And once price takes out this retracement move, we confirm this lowest part as our lower low. We confirm this lowest part. Once price takes out this retracement move, we confirm this lowest part as our lower low. But now we are moving from the monthly to the weekly time frame. This is not going to be so. This is not going to be so because it's only on the lower time frames like 1 hour, 5 minutes, 1 minute, 15 minutes, 4 hours that you can actually see that this now becomes a break of an inducement taken out. But no, this automatically for higher time frames like monthly, when we're transitioning, this is a multi-timeframe analysis. When we're transitioning from the monthly to the weekly, from the weekly to daily, from the daily to the 4 hour, from the 4 hour to the 1 hour, from the 1 hour to the 30 minutes, from the 30 minutes to the 15 minutes, this automatically becomes our what? This automatically becomes our change of character. Why is it our change of character? Because on the monthly time frame, if you look at the leg on the monthly time frame, there is no valid retracement here. You cannot see. This is the only valid retracement you're seeing here. This retracement move, and it's very far. We're looking for one that is very similar, that is very close to the break of structure, either after the break of structure or before the break of structure. So which means we are going to have to move down to the weekly time frame. Now, moving down to the weekly time frame, we are going to spot a retracement move, and now we've spotted this move as the retracement move. Now, because we moved down from the monthly to the weekly time frame, we are no longer going to call this our what? Our this, yes, of course, it will become our inducement, but this will also serve as our what? As our change of character. As our change of character to tell us what the weekly time frame is currently doing. Why? Because all these moves you're seeing here, they are the weekly time frame moves. All these moves you're seeing here, they are the weekly time frame moves. So now we need to know why the weekly time frame is on an uptrend, why the weekly time frame is buying and not selling, like the daily time, like the monthly time frame. Why is the weekly time frame buying and not selling like the monthly time frame? That is what we want to look at. So now what I want to explain to you here with this 9 minutes is the two types of inducement that we have. Let me explain the two types of inducement that we have. Now we have, like I told you, we have inducement after a break of structure, and we have inducement before a break of structure. And then the third type of inducement that we have is when it comes to multi-time frame analysis, moving through time frames like monthly, weekly, daily. That those retracements no longer become inducements, they become change of character. Now we have inducement after a break of structure. We have inducement before a break of structure. We have inducement before a break of structure. Okay, so this is our high. Okay, this is our high. This is our high. Now, this is our high. Okay. So if this is our higher high, like I told you, if this is our higher high, if this is our higher high and this is our higher low, now, and this is a break of structure, and I told you that inducement is a valid retracement move. Inducement is a valid retracement move. Why is inducement a valid retracement move? Inducement is called liquidity. That's actually where price is heading to. Expect price to go and take out the inducement, take out the price to go and take out the inducement, take out the liquidity. Now, this is a retracement move. This is a retracement move because the forex market is creating moves like impulsive movement, retracement move, impulsive move, retracement move, impulsive move. Then market will retrace again, then continue to the upside. So just once you see a retracement move, I want you to always have this idea of inducement. Always have this idea of inducement. Now there are two types of inducement. There's inducement after a break of structure, and there's inducement before a break of structure. I'll show you something. There is inducement. There's inducement. Okay. Let me do it. I have 6 minutes remaining. There is inducement. This is a break of structure. Then there is a retracement move. Price retraces and price retrace, trace and break structure. Okay, if we call this a valid break of structure, we call this a valid break of structure. 5 minutes. Let me explain this thing before this time lapses. So, and this is our higher high. It's a valid break of structure. Now we have, after a break of structure, there was also another retracement. Now these are the two types of inducement. Inducement before a break of structure means retracement before a break of structure. It means retracement before a break of structure. And this is a retracement move. And I said for us to confirm that this retracement move is our valid inducement, price has to take out that retracement move above. Price has to take it out. The upside has to be broken. For uptrends, the upside has to be broken, and as you can see, the upside here was actually what? Broken. So now, since the upside got broken, we expect price to do what? We expect price to come back. Expect price to come back and take out that inducement. We expect price to come back. We then map out the whole retracement move as our inducement. Mark it out as our inducement. So we expect price to come back down and do what? And take out this inducement. And now, once price takes out this inducement, the highest point, I'm re-explaining this inducement of a thing. The highest point becomes our higher high. Now we only confirm our higher high after price has done what? After price has taken out the inducement. That is the only time we confirm our higher high. Now, the only time we confirm our higher low is if price does what? Is if price breaks structure. And if price breaks this higher high here, that is the only time we confirm our lower low. And where will be our lower low? Our lower low is going to be the lowest part before our higher low. Our higher low is going to be the lowest part before the break of structure. Now this is inducement after a break of structure. Now after a break of structure, price did not go out to take out this first and recent inducement. Like I told you, inducement is always the first and recent retracement. This is the first and recent retracement. Why is it the first and recent retracement? Because the high here was broken. The high here was broken. Now we expect price to take it out because it becomes our liquidity. But then price did not take it out. What price did was to move, create another retracement and take out the high. Price did this thing, moved, created another retracement and took out the high. A lot of people are going to see this move and think it is a valid break of structure. No, it is not a break of structure. What price is trying to do, price is saying that, hey, I've shifted my inducement, I've shifted my liquidity from this zone to what? To this zone. So if you are seeking to buy from this zone, you're actually going to hit a stop loss. You're going to take a loss. Why? Because I am going to take out this inducement. So now price does what? Will come back, take out the inducement, come to the lowest part below the higher low where we'll be seeking to buy, and do what? And continue the move to the upside. And once price has taken out this inducement, the highest part now becomes our what? Our higher high. The highest part now becomes our higher high. So we expect price to do what? To break that high. So we are buying from this region. If we are buying from this region. This is the region we are buying from. And for this one as well, if we are buying, they are also buying from this region. Also buying from this region. Now, there is another type of inducement. I call it multi-timeframe inducement. Now, if the monthly time frame is on a downtrend, and then there is a retracement here. If the monthly time frame is on a downtrend and there is a retracement here, if this is the monthly time frame, this becomes our lower high. I have 1 minute left. This becomes our lower high. This becomes our lower low. There's a valid break of structure. Now, if this is the monthly time frame break of structure, then it means that we are going to move down to the weekly time frame. Now, moving down to the weekly time frame, once we move down to the weekly time frame and we see this in the weekly time frame, it means that I told you that the first retracement is going to be an inducement. Now this is the first retracement. This is the retracement. This is a retracement. I told you that the high has to be broken. Now if this is a retracement move, why? Because the low has to be broken. You see, this low was not broken here. Price went up and created this. So the low has to be broken. So now if the low is broken, it means that here becomes our inducement. But once we are moving from the monthly to the weekly, from the weekly to the daily, from the daily to the 4 hour, it no longer becomes our inducement. It then becomes our change of character. So if price takes out this inducement, automatically it becomes our change of character. We then know that the weekly time frame or the next time frame is no longer bearish. It's now what? It's now bullish. It's no longer bearish. It's now bullish. multi-time frame analysis. Why? Because we have our weekly range, our monthly range. This is our monthly range, and then price took out this retracement level. This is the monthly time frame swing point, right? Yes, this is the monthly time frame swing point. Now, further, this is the monthly time frame, the monthly time frame swing point, right? This is a monthly time frame swing point, and this is also a monthly time frame swing point. This is how I move through time frames. I'm kind of like trying to show you all this in one, multi-time frame analysis and the rest of them. So this is how I move through time frames. Now, like I told you, that there is something called an inducement. An inducement, there are two types of inducement. So the inducement after a break of structure and inducement before a break of structure. Now, when it comes to multi-time frame analysis, or we call it, a lot of persons call it top-down analysis. Now, when it comes to top-down analysis, what we want to look at is, now we know the higher high, our monthly lower high, our monthly lower low, and then there is a break of structure. Now, we expect price, like I said, after a break of structure, the next thing we want price to do is to take out a valid retracement move. That's an inducement. And I told you, for a downtrend, an inducement is when the lowest part was taken out, when the highest part was broken. If the lowest and the highest part was broken, then that place becomes our inducement. The lowest part was broken, the highest part was broken as well. So here becomes our inducement. But as a result of the fact that we are moving through time frame, through the monthly and the weekly time frame, if you want to pick out the monthly time frame inducement might be very, very far from the break of structure, and you might not even see a valid retracement after the break of structure. So when you're moving through time frames like the monthly to the weekly to the daily to the 4 hour, the 4 hour to the 1 hour, the 1 hour to the 30 minutes, 30 minutes to the 15 minutes, and the 15 minutes to the 5 minutes. Once you look for the last swing point of a particular time frame, then when you move to the next time frame, the retracement move no longer becomes an inducement, it becomes a change of character. It no longer becomes an inducement, it becomes a change of character. A change of character. That is what it means. It no longer, if on the 4 hour time frame this is the last swing point, and then I move to the 15-minute time frame, the next retracement move no longer becomes my inducement. It becomes a what? It becomes my change of character. It becomes my change of character. And I am going to show you that in the chart. These are the three types of retracement moves that we have. Retracement moves as inducement, and then retracement moves as change of character. Now, like I said, on the monthly time frame, okay, we're deleting this, okay, how about I just leave it? Going to leave it. The retracement move, you see, on the monthly time frame, this is the lower high. The low was broken, right? Yes, the low was broken. Very valid. Now, since the low was broken, we call this our break of structure. And since this is our break of structure, where is our swing point? Like I told you, the next thing we are looking for is our swing point. And for a downtrend, our swing point is the highest part, that's the previous lower high, and the what? And the lower low that got broke, the previous lower high and the recent low after the break of structure. Now this becomes our swing point. This low and this high and this low becomes our swing point. Now the next thing I know you're going to say is, after a break of structure, we're looking for an inducement, right? Yes, an inducement. Now the problem is there a valid retracement move that you can see here? Yes. This is a valid retracement move. You can call this a valid retracement move. Why would you call it a valid retracement move? Because I told you that for a downtrend, the lowest candle has to be broken both down and up. Like the low and high of the lowest candle of a retracement move has to be broken both down and up. This is retracement move. It was broken here. Price broke it. Price broke it here. Price broke it here, and the high was broken. Can you see? The high was broken, the low was broken. So we call this our, for the monthly time frame, you can call this your inducement. But because we are moving through time frames, we're heading to the what? To the weekly time frame. We cannot actually call this our valid. We cannot call this the main inducement. Why? Because there are other time frames that are after this. There are other time frames that are after this. So if you want to call this your valid retracement, you might actually be making a very big mistake, and you might wait forever for price to come to that point and take it out. Because as you can see, even as price took it out, we started seeing some retracement moves. But what I'm trying to tell you is that, being the fact that we are moving from monthly to weekly time frame, we are not going to be making use of this move. Why? Because if you go down to the weekly time frame, you're going to see you're going to see another retracement move that is going to make a lot of sense to you. And remember, I told you that being the fact that we are moving from monthly to weekly time frame now, any retracement move we see, and once price takes it out, it no longer becomes our inducement, it becomes our change of character, which means that the next time frame is now the opposite of the previous time frame. The next time frame is now the opposite of the previous time frame. Let's move down to the weekly time frame. I'm going to be deleting this now. Actually, right, draw it. Just stick with me, you get to understand this thing with time. Okay, I might leave this one. Now let's move down to the weekly time frame. I'm using GBP USD for this analysis. Now, can you see that inside of the monthly swing, we have moves, we have up moves. You see, price is moving towards the upside. See, this is an up move. Price is moving towards. See, price is moving towards. See, price is moving towards what? Towards the. That's very sharp. Price is moving towards the what? Towards the upside. So, since the price is moving towards the upside, now we ask ourselves, why is the weekly time frame bullish instead of bearish? Why is it bullish instead of bearish? Now, like I told you, the next thing we're going to be looking for is an inducement. But now we are looking for a valid retracement, right? A valid retracement. Now, can we spot a retracement after of structure? There is after a break of structure. Can we spot a retracement after a break of structure? No, there's no retracement after a break of structure. But can we spot a retracement before a break of structure? Yes, this is a retracement move. 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 Why is it a retracement move? Because the lowest part, the lowest candle, the high and low of the lowest candle was taken out. The high and low of the lowest candle was taken out. Now look at this. This is a retracement move, right? Yes, this is a retracement move. Now, since it's a retracement move, why then is it a retracement move? Because the high and low was taken out. Now, of the lowest candle, the high and low of the lowest candle was taken out. Now this is the lowest candle, right? Yes. Now, you see, since this is the lowest candle, the what? So was taken out. This candle took out the lowest candle's low. Now this lowest candle's low. This candle did what? It took it out. He said, "Hey man, I'm taking you out. Sorry." And he took it out. And since price took it out, what else? The high of that lowest candle was also taken out. Like, this is clean price action. It was also what? Taken out. Sharp. Like, this is actually very, 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 very nice. Once I see this now, I'll be like, what? this move becomes my valid retracement move, my valid retracement move. Now, since I know that, oh, now this is my valid retracement move, okay, so what type of retracement is this move? Is it an inducement? Is it a change of character? To be precise, is it an inducement? Is it a change of character? And like I told you, we move down from the monthly to the weekly time frame, so automatically this retracement move no longer becomes my inducement, it becomes my what? My change of character. And once I see a change of character, like I told you in the previous session, previous class, previous session, like I told you in the previous session, once I see a valid retracement move, what is this signifying? It's signifying that price has turned from bearish to bullish on the what? On the weekly time frame. It's that simple. It's that simple. It's signifying that, hey Manuel, I've actually turned from bearish to bullish on the what? On the weekly time frame. I look at this and I'm like, thank you for telling me. And then you see, price it out. This becomes our valid change of character. This becomes our valid change of character. Now, since this is our valid change of character, I'm not fully aware that we are now on the weekly time frame. Yes, we are now on the weekly time frame. And since we are now on the weekly time, I'm going to be cutting price. I'm going to be cutting price. I'm going to be using my bar replay mode to cut price from that. I'm going to be using my bar replay mode to cut price from that level. Now, since we know that price has taken out the retracement move, which means price has changed character to the upside. Now, understand, like I told you, comes to uptrend move, once we see price change character from, if this is and then remember that I told you that if this is a lower high, remember I told that if this is a lower high and this is kind of like a lower low, and this is a break of structure. If this is a break of structure, then if this becomes our lower high again, lower high, this becomes our lower high again, and this becomes our lower low. Remember that I told you that, and this becomes our lower low, this becomes our lower low, if this becomes our lower high and this becomes our lower low, then what it means is that, okay, this is also the break of structure. I remember that I told you in the previous session, the previous episode, that once price takes out this lower high, becomes our change of character, right? Yes, becomes our change of character. And after the change of character, the same thing continues over again. We expect price to take out a what? To take out an inducement. We expect price to take out an inducement. Now, price comes, creates this. A lot of people are going to think that this is actually a break of structure, but no, this is not a break of structure. This is an inducement. Why? Because there was no valid retracement move before the change of character. Remember that I told you in the previous session that there are when it comes to a change of character, there are two types of inducement. When price changes character, there are two types of inducement: inducement before a change of character, inducement after a change of character. When it comes to break of structure, there are two types of inducement: inducement after a break of structure, inducement before a break of structure. When it comes to moving from time frame to time frame, weekly to monthly to daily to 4 hour to 1 hour, the last swing point on any time frame, once you map out your last swing point on any time frame, if you move to the next time frame and you see a retracement taken out, it is a change of character. It is a change of character. So now price has changed character to the upside. What are we expecting price to do? We're expecting price to take out an inducement, and I told you that an inducement is a valid retracement move. It is a valid retracement move. I keep making statements, I keep saying this so that you understand. I don't think there's any any video you can find that will teach. Yeah, there is a lot of videos you can find on YouTube that properly teach all these very very well. Yeah, there is a lot and lot of videos you can find on YouTube that will teach you all this properly. But I am taking my time to also explain this thing to you and let you understand how to move through time frames, how to spot your change of character, how to spot your inducement, how to spot your lower highs, your lower lows, your higher highs, your higher lows. Everything you need, it's here. All you have to do is just study, study. Now price has changed character to the upside. Nice. What am I expecting? I want price to take out the valid retracement move. This is a retracement move, and I said for it to be valid for an uptrend. The highest and the lowest part has to be taken out. The highest candle has to be taken out both upside and on the downside. It has to be taken out both on the upside and on the downside. And you see, price took this out on the upside. The highest candle should be up here. If you check it, the upside will be taken out, then the lowest part will also be taken out. Then we'll confirm here to be our inducement. And once price takes this inducement, what are we expecting price to do? Once price takes out this inducement, which we also call liquidity, what I told you is also called liquidity. Once price takes out this inducement, yes, we call this our higher high. This is market structure mapping. This is how you can read the forex market. And you like, by just doing this, you understand that, oh, okay, price is now bullish, or price is now bearish, price is now bullish, or price is now bearish. Whatever way you want, this is how you read the forex market. So since I now have spotted my higher high, what else? The same thing keeps repeating itself. Next thing, a break of structure. Next thing, inducement. Next thing, break of structure. Next thing, inducement. Next thing, break of structure. It keeps going like that until price decides to take out the previous lower low, until price decides to take out the previous higher low, until price decides to take out the previous higher low, before we can then confirm our what's it called, our change of character again. Until price decides to take out the previous higher low before we can confirm our change of character again. So the same keep happening. Inducement, break of structure, inducement, break of structure, inducement, break of structure, until price decides to take this higher low before we now confirm our change of character again. Before we can confirm our change of character again. This is price movement. Let's go back to the charts. Now price has taken out the what? Price has taken out the change of character. Now what are we expecting? We're expecting price to do what? Take out the inducement. Now remember I told you that once you see a change of character, the price should take out the inducement based on two types of inducement. Once it comes to a change of character, there is inducement after a change of character, and there is inducement before a change of character. I keep repeating this thing so that you understand it. Please understand it. There is inducement after a change of character, and there is inducement before a change of character. Now, and I told you that inducement is a retracement move, right? A retracement move whereby the high and the low of the highest or the lowest candle has to be taken out. I keep repeating this thing over and over again. Okay. Now, is there a retracement move here? Yes. Where is the retracement move? This is the retracement move. It happened with one candle, yes, but it's a retracement move. Why is it a retracement move? Why is this a retracement move? Because this is also a valid retracement move. This move is also a retracement move. Why is it a retracement move? Because in this retracement, this is the highest candle. The high was broken for an uptrend. The high was broken, right? Yes, the high was broken, and the low was also taken out, was also broken, was also taken out. Can you see? This candle's high and low was taken out. This is a valid retracement move. So now we then understand this whole retracement move becomes our inducement. Why not pick this one? Come in, let me draw this. Why not pick? Why not pick? Why not pick this one here? This is also an inducement. Why pick this one here? Because I remember I told you that an inducement is the first, take note of it, the first. It is the first and valid retracement. The first and valid retracement. Take note of that. This is the first one, right? Yes. So if price moves down from this position and takes this out, then we confirm this highest place as our what? As our higher high. We confirm it as our what? As our higher high. That is what we are going to do. Confirm it as our higher high. Am I deleting this? I'm not supposed to delete this. Okay. Now, this becomes our inducement. We expect price to come and take out this inducement. Let's pray price. I'm going to actually make it very fast. You see, price is moving. What's it doing? What's it doing? What's it doing? It's coming down to take out the inducement. It's coming down to take out the inducement. Okay. Let's see if price is going to take out the inducement. Let's see if price is going to take out the inducement. Okay. Okay, let's see if price is going to take out the inducement. Take this out, take this out, take this out. Come on, come back down and take it out. See, price did not do that. It come back down to take out this inducement. What price did was to retrace. It retraced again. Now, a lot of persons are going to think that price has taken out inducement here because they're going to say that this is a what? This is a retracement move. Yeah, this is a retracement move. This is a valid retracement. It is not a valid retracement move. It's not. It's not a valid retracement move because if you zoom in clearly, you'd understand that this is the highest candle. Just like here, this was the highest candle. And the high and the low was broken, right? Yes. Now, this is the highest candle. A lot of you are going to say, what about this candle? The high was broken here and the low was broken here. No, that's not a retracement move. Why? Because when he wanted to retrace, he wanted to retrace this candle. If this candle went down and took out this low, then it would have become our valid retracement. If it went and took out this low, it would have become our valid retracement. But you see, the next candle went above of it. The next candle went above of it, so this becomes our valid retracement candle. Now, the low was taken out. Yes, the low was broken, but the high was not broken to the upside. Let's zoom in. Was it broken? Okay, yes, it was. Okay, let's zoom in. Yes, actually, it was broken to the upside. Okay, yes. So, see, when you're looking at price, you actually have to zoom in a lot. So, yeah, actually, it is our valid retracement move. Sharp. It is our valid retracement move. It is our valid retracement move. So, if we cut price from here, we know that okay, and price break this high, and that did it there. He did it. When we zoomed in, we saw it. He did it, and you see what price did. So this becomes our valid inducement. This becomes our IDM, inducement, liquidity. Price takes out this liquidity, then we do what? Then we invalidate. Once we've seen a new inducement, we invalidate this inducement. We invalidate this inducement. We invalidate it. This becomes our new target. We expect price to take this out. And if price takes out this inducement, then the highest part becomes our higher high. Why are we calling this an inducement? Because this highest candle here, the upside, the upper part of the candle, when you zoom in clearly, it was what? It was taken out like this. Can you see? This week is higher than this week. It took it out. Up. And the lowest part was also broken. Sharp. See? Price broke here. Broken. Exactly. Once you see this, you know that okay, price will take out inducement. Price actually, I'm expecting price to take out this inducement. Okay, let's see what price does. See? And the moment price took out the inducement, it did what? Price bought. So price takes out the inducement and then we confirm the highest place at first weekly higher high. Our first weekly higher high. Our first becomes our first weekly higher high. Now, what are we expecting price to do? Expecting price to break this higher high as our to make this as our break it. This if price breaks this high, it becomes our valid break of structure. And if price breaks this high, if we confirm it as our valid break of structure, this low then becomes our higher low. It becomes our higher low. To the upside, let's play price. Let's see what price does. It's about to break it. Price weaks it, he weaks it, he weaks it again, he weaks it again, and price breaks it. Sharp. Now, I want you to understand about break of structure. A lot of persons are going to see this thing and think that because price took out this high, that it is a valid break of structure. No. Yes, this is a break of structure, yes. But why did I call it a break of structure? Not only did price take it out here, I'm expecting price to take out this break of structure, but to break it, the break of structure has to be valid. How do we confirm that the break of structure is valid? If and only if price takes it out with a body and not a wick. A lot of persons are going to extend this line and say, yeah, this is the body. No, that's not the body, bro. That's not the body. That is not the body. This price took out this high with a wick. He wicked it. Took it out with a wick. That is not the body. So what I do here is I transfer this other candle to this candle. See, price took it out with a wick until I see the higher candle, which is this one, being broken by a body. See, it broke it here by a body. Then I confirm that okay, yeah, this is now actually a valid break of structure. Why? Because here it was broken by a body, it was sharp, broken by a what? A body. Then since price broke this place to the upside, I then confirm this lowest as my what? As my higher low. It's that simple. This is how you, this is market structure mapping. It's that simple. This becomes my higher low. This becomes my this becomes my higher low. This becomes my weekly higher low. Then what am I waiting for again? I am looking for an inducement. Price to give me a retracement move, call it an inducement, and take it out again. So I'm waiting for a retracement move. Now, this high, where's the highest candle? This candle is high, is the highest candle. Now, the high was broken, but the low, this candle did not break this low. This candle did not break this low. Let me zoom in. This candle did not break this low. This low was not broken. And then this candle went and took out this high. So this is our highest candle. Now, for us to confirm a valid retracement, price has to go and break this candle for us to confirm the retracement move. Price has to go and break, because there is no valid retracement here. There is no retracement before a break of structure. This is our higher. There is no retracement before a break of structure. So we expect that price wants to create a retracement after a break of structure. It is that simple. Let's play price. Can you see? Exactly. So price now did what? It came. This is the highest candle. It broke this high, right? Yes, it broke high, and then the low was also broken. The low was taken out. Can you see? If we zoom in on this candle, you would see that the low was what? It was taken out. Can you see? This low candle was what? Was taken out. Very valid, like very valid. Like once we see it, we know that yes, this is very valid. This is valid, absolutely valid. Now we've seen this. What next? The next thing we're going to be looking for is for price to take out this. Then this whole retracement becomes our what? Our inducement. It becomes our inducement. Do not call this a break of structure. This is not a break of structure. This is an inducement. Whole place becomes our inducement. This whole level becomes our inducement. Now we expect price to come and take out the inducement. Let's play price. You see what price did? Can you see what price did? Can you see what price did? And a lot of persons are going to say, oh, price has created a new retracement. No, that is not a new retracement. A lot of persons are going to say price has created a new retracement. No, why? Because this is the highest candle, right? This is the highest candle, and the high and low of the highest candle has to be taken out. This is the highest candle that took out this one. Now the high has to be taken out, but the low was not taken out. So no, it is not. This is not a retracement move. This is an smart money chart. This is a smart money chart. This is a smart money chart. It is not a retracement move. This is not a retracement move. I don't call it a retracement move. So price will still come down and take out this my inducement here, or we are not doing anything. Price has to take out this inducement or give me a valid retracement move for me to validate this one here. So let's see what price does. You see, now this is the highest candle. The low was taken out. Can you see what price just did? Price just gave another retracement, making this the highest candle, making this low to be what? Broken here, making this low to be broken here. But then the high has not been taken out. The high has not been taken out. The high of this candle has not been taken out, but the low has been taken out. So this is not yet found a valid retracement until the high gets taken out. Until the high gets taken out. That's what price. You see what price did? Exactly. Price came back and did what? And took out my inducement. This is clean price action. It is a clean price action. Now price has taken out my inducement. What am I looking for? Automatically this high becomes my next weekly higher high. This becomes my next weekly higher high. Now price is retracing back. If price takes out this high, we confirm a change of character. If price takes out this higher low, remember I told you once price takes out this higher low, we confirm a change of character. But price will not take out this higher low. Why? Because it's on an uptrend. It is on an uptrend. So what price does? Can you see? Can you see? Price is not coming back here to take out this higher low. Why? Because it's on an uptrend. It's not doing that. It's not doing that. Now, if price breaks this high, it becomes our valid what? Break of structure. It becomes our valid break of structure. Price breaks this high, it becomes our valid break of structure. Price breaks that high, it becomes our valid break of structure, and then we confirm this lowest part as our higher low. Let's watch price. I'm going to increase this with 7. Exactly. It's that simple. It is that simple. Now price has taken out this high, and you see, very clean price action. It did what? It came down here and it took out this high, and taking out this high, it took it out with a what? With a body. So I don't need to stress myself this period. It took it out with a body. Oh, thank you, Jesus. Thank you, Forex market. It took it out with a body, and price has taken it out with a body. What else are we looking for? I'm looking for a retracement move. I am looking for a retracement move. I am looking for a retracement move. Now, here becomes my retracement move. This becomes my valid retracement move. But first of all, we are going to confirm this low as our higher low. We are going to confirm this low as our higher low. We'll confirm this low as our higher low. And confirming this low as our higher low, what else are we looking at the market to do? What are we looking at the market to do? Why is this our retracement? We are expecting price to do what? To take out the first and recent retracement, which we are going to confirm as our what? As our inducement. We are going to confirm it as our inducement. So now, why is this a valid retracement? Because this is the highest candle, and the highest candle has been taken out. The high and low of this highest candle has been taken out. The high and low has been taken out. If you zoom in, the high has been taken out, and the low has also been taken out. The low has also been taken out. The high and the low has also been taken out. So what am I expecting? I'm expecting price to come and take out this inducement. This becomes my inducement. This becomes my inducement. We follow price action. This becomes my inducement. I'm showing you how to spot a break of structure, inducement, change of character. Now let's play price. You see what price did? You see what price just did? Now price had to give us another inducement. This is now inducement after a change, after a break of structure. You know, I told you that there is inducement before a break of structure, and there is an inducement after a break of structure. Now, why is it an inducement? Because the high and low of the highest candle was broken. This is the highest candle. The high broken. The low also taken out. Can you see? High and low of the highest candle was taken out. This is not the highest candle. This is the highest candle, and the high and low of the retracement was taken out. So automatically becomes a transfer of inducement. It becomes, we then move the inducement from here to here. It becomes our valid inducement. We then move the inducement from here to here, and then we are expecting price to do what? To take out this inducement. And you see, exactly, price has done what? Price has taken out the inducement. Price has taken out the inducement. It is that simple. Now, a lot of persons are going to want to buy from this zone or whatever. No, remember I told you that we only buy when price gets to the zone that is closest, the zone that is closest to the higher low, that is closest to the higher low. So now price has taken out the inducement. What next? We confirm this higher place as our higher high. We confirm the higher place as our higher high. Now let's play price. See, price almost got here, almost got to this point. See, very close to the what? To the higher low. And now price is doing what? If price breaks this high, then it becomes our valid break of structure. If price breaks this high, this becomes our valid break of structure, and then we confirm here as our higher low. Let's see. Let's play price. Oh, this is clean price action. This is clean price action. Can you see? Exactly, and price does exactly what we wanted it to do. And price breaks. Now here's the problem. A lot of persons are going to think because price took out this high with this candle, it has broken. No, I told you that until I see it break by body, that is when I will confirm that it has broken. You see, this candle broke by body here. So price has broken to the upside. Therefore, we have to confirm this as our higher low. See the price action, it's very clean. It's a clean price action. If you keep following price like this, you would not make a loss. If you keep following price like this, you, of course, you're going to make losses. Sometimes you're actually going to be correct and still make losses, but 80% of the time, 90% of the time, you would be right. 90% of the time, once you keep following price, you don't trade against price, you have very good win rates. You keep making profits once in a while. Even if you make a loss while being right, it's okay to make a loss while being right, but once you keep following price, your win rate is going to increase. You're going to have massive win rate, good win rate. Okay? This is clean price action. I love GBP USD. It's one of my favorite pairs to trade. GBP USD, ZAL USD. I only trade GBP USD and ZAL USD. GBP USD and ZAL USD. But my most traded pair is ZAL USD. But then I also trade GBP USD. I love GBP USD because the price action is so amazing. This is top notch. GBP USD, amazing. So this is how you keep on spotting your market structure time and time again. Now, as a result of that, I'm going to fast forward. I'm going to fast forward the video. I'm going to map out the market structure, fast forward the video, so that we'll see if we can move down to the daily time frame. Or you can continue from this. You can actually continue from this and just keep doing the same thing time and time again. And once you get to the daily time frame, you do what? Move over to the 4-hour time frame. Once you get to the daily time frame, move over to the, oh, you see, we even got into the last part of it. So this actually is our break of structure. This is our break of structure. Where is our inducement? See, this highest candle, the high and the low was broken, so automatically this becomes our inducement. We've got to the last part already. Wow, that's nice. So this becomes our inducement. And price has taken out. We expect price to take out this inducement, right? Yes, we expect price to take out this inducement. Let's see. And voila, boom, price has taken out the inducement. This becomes our higher high, our weekly higher high. This becomes the last high on the weekly time frame. And then, of course, this becomes our lower low. So we are expecting price just normally to do what? To retrace back to a zone closest to this higher low before pushing back to the upside. Now, let's play price again. See what price is doing. See? So now price has taken out the inducement, right? Yes, taking out the inducement. From here we can then move to the what? To the next time frame. We can then move to the next time frame. And the next time frame is the daily time frame. Now can you see? If you look at the daily time frame, you understand that oh, this is the weekly event, right? Yes, this is the weekly inducement. Now on the daily time frame, we've seen a weekly inducement. Ah, since we know that this is the weekly inducement, what else are we waiting for? Price to break structure to the upside. For price to break structure, the weekly and the daily higher high actually match. The weekly and the daily higher high, they actually match. So where we're expecting price to come to, see, there's no top price action here, you see. So the weekly and the daily time frame, they are the same. They are the same higher high and the same inducement has swept. So then we move down to the 4-hour time frame. And on the 4-hour time frame, just taking out the inducement. Now on the 4-hour time frame, after price has, let's see. Okay. Now on the 4-hour time frame, price has taken out inducement. Now I want you to understand something. Like I told you, once we are moving through time frames, any retracement price takes no longer becomes an inducement but a change of character. Price has taken out the inducement here, and since price takes out the inducement here, do we have a valid retracement here? Yes, price has taken out the inducement. So since price has taken out the inducement, no. Can you see? Price took out the inducement and still went and changed character. I'll show you. On the 4-hour time frame, this is the weekly inducement. Now on the 4-hour time frame, there is a retracement move here, and price has taken out the inducement. Like I told you, for us to know if the 4-hour time frame is on an uptrend or a downtrend, we need to find a change of character, and the change of character will tell us whether price is on an uptrend or if price is on a downtrend. Where is our change of character? This is our valid retracement move. This is our valid retracement move. So if price takes out this high, it becomes our change of character. If price takes out this high, because can you see? Price takes out this high, so it becomes our change of character. So it becomes our change of character. Price has changed character to the upside. Price has changed character to the upside. Now, is there a valid inducement? Is a valid, no, this is the highest candle. The high has not been broken and the low was not broken as well, so this is not a valid retracement. Is this a valid retracement? The high has been broken, yes, and the low was broken as well, so this is our valid retracement move. This move here is our retracement move. So price takes this out, price takes out this inducement, we then confirm this as our higher high. Price takes out that inducement, we then confirm it as our higher high. Can you see what price did? Price went gave us a new retracement move, so we then call this the next inducement. Is this also an inducement? Yes, you can call this an inducement as well. This is the highest candle and the high and the low was broken, so the candle color does not matter. The candle color does not matter. The candle color is not important. This is our valid retracement move. This is an inducement. Price takes out this inducement we confirm our higher high here. Exactly, price has taken out the inducement. We confirm our higher high on the 4-hour time frame. We confirm our higher high. We confirm, right? Yeah, confirm our higher high on the 4-hour time frame for price to be what? Bullish. Price to turn bullish. So this becomes, since price has taken out the inducement, we are waiting for a valid break of structure. Let us wait for a valid break of structure. Can you see? And price keeps going down. Price kept going down. Price kept going down. So price kept going down. Let's keep playing price, and price keeps going down. Price keeps going down. Okay, this is our change of character. Our inducement was taken out. Change of character, and okay, I missed something here. Let's come back. Let's come back. This move, I'm seeing something here. This move. Now, is this a retracement move? Yes, this is a retracement move. It happened with just one candle. It is a retracement move. It happened with just one candle. Why? Because this high, the high was broken, the low was not broken. Then this candle, the high and the low, they were both broken. Can you see? This is the low. The high and the low were both broken. So this becomes our inducement. This becomes valid inducement. I'm sorry for the mistake. This becomes our valid inducement, because I was wondering why price would keep going up, keep going down without giving us a higher low. This becomes our valid inducement. So play price, and price takes out the inducement. Once price takes out the inducement, we confirm this place as our higher high, confirm this level as our higher high, confirming this level as our higher high. Then this becomes our valid break of structure. Yes, this is it. Becomes our valid break of structure. Why? Because it broke by body. And then since this is break of structure, this becomes our valid higher low. This becomes our higher low. This becomes our what? This becomes our higher low. So now we expect price to give us another inducement. This is a retracement after a break of structure. This becomes our inducement. This becomes our inducement, but price transferred the inducement to here, so this becomes our valid inducement. Let's play price. Price has taken out the inducement. Now, if price takes this higher low, it becomes our change of character. If price takes out this higher low, it becomes our change of character. If price takes out this higher low, it becomes our change of what? Character. It becomes our change of character. Price takes out this higher low, it becomes our change of character. First of all, we are going to confirm this high as our 4-hour higher high. It becomes our 4-hour higher high. So then let's play price, and boom, price takes out this higher low. This becomes our change of character, which signifies that 4-hour time frame is now automatically bearish. 4-hour time frame is now automatically bearish on GBP USD. The 4-hour time frame is now automatically bearish on GBP USD. So what else are we looking for? We're looking for price to take out an inducement after or before the change of character. Is this a valid retracement? Yes, because this is the lowest candle, and the up and the lowest part of this candle was taken out. This is our inducement before a break a change of character? Is there an inducement after a change of character? Is there an inducement after a change of character? This is the highest candle. This is the highest candle. The low was not broken. The high was broken, but the low wasn't broken. So this is not a value retracement. So we'll play price again to see what price is doing. See, price comes down to confirm, gives us another inducement. This becomes another inducement for us. This becomes another inducement for us. Yes, this becomes another inducement for us. Now, is this a valid retracement move? Yes. Why? Because this is the lowest part, and both the high and low has been broken. So price transfers this inducement again to this position. Wow, what a clean price action. I told you I love GBP USD. See, price takes out the inducement. And if price takes out the inducement, we confirm this as our lower high. We confirm this as our lower high. Then what else? Waiting for price to get to this higher high region. This high, call this high. We no longer call it a higher high because market is on a downtrend. We call it a high. It's a high. This high, we set price to reach out to somewhere around here before going down to break this low. If price breaks this low, this becomes our new break of structure. If price breaks this low. So let's see what price does. You see, price retraces up. And let's see. And price is about to change character. That's what price does. A lot of persons are going to think that this is a change of character or a break of structure. No, this is a transfer of low. Like I told you, this is a. Now, once a high or a low is taken out by a wick, once price takes out a high or a low, once price wicks it, it becomes a transfer of low. This becomes a transfer of this low. It becomes a transfer of low. Price wicked it. You see, price wicked it. This is a transfer. Is it a transfer of low? Yes, it is a transfer of low. This is a transfer of low. So this becomes a transfer of low, because the transfer of this high over to this high. Unless price breaks this structure down, here, then we can confirm here as our lower high. Unless price breaks this structure, you see, did not take it out, it just wicked it. Price wicked it, respecting that region, it wicked it, and then expect price to pull back down. Price breaks this low, then this becomes our valid break of structure. And can you see? This is where price is at currently. So we know that the 4-hour swing is this. This is a transfer of low, and this being a transfer of low means that our swing point is no longer this and this. Our swing point is this. and this, if price breaks this low, of course that's the only time it's going to become a break of structure. So we see this becomes our swing point. This becomes our swing point. This, call this our higher high. Our higher high, this is our higher high. So this is transfer of high, sorry. It's not a transfer of low, it's a transfer of high, sorry. Transfer of high, so transfer of high. So this is it. I call it a transfer of high. Call it a transfer of high. The market is just transferring this higher high over to this place, or I just leave it the way it is because price did not take it out. If price has taken it out, then would form a valid change of character. If price takes it out, then would confirm a valid change of character, but we can only confirm a valid change of character when there is a lower high. So there is a lower high, so we're expecting that price will still push downwards and break this for our low. Because when price weaked this, you see the momentum to the downside, and then you expect that price will push down again and break this low on the 4-hour time frame. So if you want to move down to the 1-hour time frame, 30 minutes, 15 minutes, 5 minutes time frame, you can just keep doing the same thing. From this point on the 4-hour time frame, it is an inducement, but once you move down to the 1-hour time frame, it becomes a change of character. Once you move down to the 1-hour time frame, it becomes a change of character. You see, the 1-hour time frame was actually bullish here, and then from here became bearish. You see, so this is how to move through time frames. Same thing over and over and over again. This is how you move through time frames. Same thing over and over and over and over again. This is how you move through time frames. So this is going to be the end of this episode. In the next episode, I'm going to be taking you on. So in this episode, we've successfully understood how to move through time frames. When I say move through time frames, we've understood how to spot your higher highs and higher lows and break of structure and swing point and inducement, especially the inducement, the higher high, the higher lows, and your valid break of structure. Like I told you, spotting an uptrend or a downtrend, then the previous swing points, the valid break of structure, impulsive corrective move, and your inducement. Let me see if I can find a sideways market. Let me see if I can find a sideways market. Market is going sideways. Market is going sideways. Okay. Zone. Market is actually going sideways in this zone. Let's check. Let's check the 30 minutes time frame. About the 15 minutes. Let's check. The market is going sideways here. Okay, this is a sideways market. This is what we mean by sideways. The market is going sideways. It's accumulating. The market is accumulating. It's not breaking through this zone. The market is not breaking through this zone. If you go down to the 5 minutes time frame, that's where you're going to see it clearly. Let's go back to the 15 minutes. Let's cut price from there. Let's cut price. Let's cut price from there. Go down to the 5 minutes, you're going to see it clearly. Can you see? Exactly, this is sideways. Market is going sideways. See, it's consistently hitting a particular zone, bouncing off of the same zone. This is called a sideways market. Like I told you, whenever price is doing this, I don't actually trade this market because sometimes I can be on a market inside my trade. Market will just consolidate, move sideways, and then keep pushing to the upside or to the downside depending on whether I am buying or selling on that particular day. So this is, well, once I am not on a trade and I see this, there is actually a very good way to trade this. It's actually a very good way to trade this. If I want to trade this, I'm going to wait for price to, this is accumulation, price to manipulate, break out of this zone. You see, price has broken out of this zone. Then I'm waiting for price to distribute. And if price is distributing, I want price to come down to a particular POI. I call it point of interest. I want price to come down to this point of interest and buy from there. I want price to come down to this point of interest and buy from there. I want price to come down to the point of interest. I don't know, my short position and long position is, they're not clicking. Then accumulation, price breaks out of the accumulation and I want price to, why is this stuff not clicking? Let me see. Why is this stuff not clicking? Okay, so let's see. It's coming back now. Let's the price, that current zone. I mapped out on the 15 minutes. Where is it? Where is that? Okay. This zone. This zone. So I'm expecting price to, since price broke out of the accumulation zone, on the 5 minutes, I'm expecting price to just come back and tap me in on that zone. This is going to be where I'm going to be buying, and I'm going to be targeting one and 1:5 risk to reward ratio. This is what I'm going to be targeting. So let's see what price actually does. Price come back down. Let's see. Let's follow price. Click come back down and tap me in. See, price comes back and taps me in, and then it keeps going. Let's go. Write it up. And you see, price just keeps going. My directions. 10. Okay. See, price just keeps going and 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 keeps going, and price hits my target. See, it's almost there. It's almost there. Let's see. Price is going to hit my target. Let's see if price is going to hit my target. And price, I think price is going to hit my target. Boom. And there you have it. Price hits my target. Can you see? It's that simple. Like, it is that simple. If I risked $100 on this trade, I am making $500. If I risked $1,000 on this trade, I'm making $5,000. If I risked $10 on this trade, I'm making $5. It's that simple. I know how to trade an accumulation zone. I know how to trade an accumulation zone. This is what I look for in the market consistently. Once I see an accumulation zone, normally I said I don't trade it, but that was a few years ago. I think a year ago I could not trade an accumulation zone, but now there is something I look for in an accumulation zone, and once I see it, I take it. And as you can see, price respected my accumulation zone, and then I hit my take profit. This is going to be the end of this episode. It's going to be the end of the episode. I want you to go back to your chart and backtest and map out, follow the structure, the monthly time frame to the weekly to the daily to the 4 hour to the 1 hour to the 30, 15 minutes, 5 minutes. Same thing. Do the same thing over and over and over again. You have to keep doing the same thing over and over and over and over again. It is that simple. Best of luck. In the next episode, I'm going to be talking about point of interest. Point of interest are zones where we expect and price to come back to. Like this zone, I knew price was going to. I expected. I didn't know if it was to hold or not. I expected price, like it was what I was looking for, but can still come back here and still take me out. Do whatever I want to do. I am not the owner of the market. I am just a trader. So knowing fully well, I expected price to come back down, tap me in, and then move to my direction. As you can see, price respected, came back, tapped me in, and then boom, moved to my direction and gave my take profit. So this zone is what I call point of, we call it point of interest. Call it point of interest. This is actually a very good entry model. You can make use of this anytime you see it on any time frame, and it will work consistently. So this is it. I'm going to teach this entry model. I'm still going to teach it in one of my episodes. It's going to be coming up. I'm going to teach this and model. So that's it. Thank you, and do well to like, subscribe, and follow. Like, subscribe, and share this video. Share to other traders. Send to other beginner forex traders. Help them. Someone out there might be in need of this video. Do well to like, subscribe, and share this video, and I'll see you in the next episode. Happy trading. And remember, like I'd always say, no excuses. Do it or don't do it.